Welcome to the Investing with A-Aron channel. I am A-Aron, and my channel focuses on sharing my investing knowledge with 25 years of investing. I have obviously made many mistakes along the way, and just like life, the ability to learn from those mistakes early and not costing too much money along the way is the key to investing. So today, we're going to talk about the streaming stock wars. Of course, a lot of times, a lot of people are moving away from the satellite and cable services over to streaming. So streaming, they're cutting the cord, they're getting rid of the line, and they're using streaming services. So I just thought one day when I was trying to decide what streaming service to use on my phone, because I'm actually getting fiber internet coming up, and I just kind of wondered, what stocks, what actually streaming service would I get with that service? Because right now I've got satellite, and I was thinking about cutting satellite. So that got me thinking, well, what if I took all the stocks that are in the streaming service and do an evaluation and actually find out which one should I invest in out of all these stocks, and then take a sample. So that's what we were going to do today. First, we're going to go over the stocks for the streaming, which stocks are going to be streaming. Second, we're going to look at the subscriber count. We're going to see what is the subscriber count of all of these stocks, and do some comparisons, maybe put some graphs together. So the third thing is this subscriber growth. We're going to see how the growth is compared to year on all of these stocks, and decide which one should we invest in. And the fourth, we're going to look at the content quality. Let's go deep into the plans and see what each plan compares, because that's a good idea when you're the customer to know which plan you're going to be in, if it actually has a cost benefit to that particular plan, to choose one over another. So we're going to look deep at that content quality. And then number 5, we're going to take a good look at the cost comparison of the plans. Okay? And number 6, we're going to look at the stock valuation. What is the stock valuation? What are the financials to get that decision? And we're going to look closer at that. And the 7th thing, we're going to look at the best stock value. So at the end of the video, I'm going to tell you what I'm going to be investing in out of all these streaming stocks, and what I'm going to keep an eye on. So for that, we're going to go ahead and get started here. So we're going to get started with all the stocks. And what I did is I took a Excel spreadsheet. I'm a pretty Excel document, old time school kind of guy. So what I did is I took all the stocks that I was interested in. So as you see here, the first column is the stock logo, and the second column is the stock symbol. And then we have the stock name, and then all the streaming services that stock has for that particular stock. So a lot of these stocks that I've noticed actually have multiple streaming services, which is kind of cool. I didn't know that for some of these. So first one is at&t, and it has at&t TV Now, and then HBO Max, which is more of the movies service. And then we have Comcast, which gives you Xfinity, Spectrum, Peacock, and 33% stake in Hulu. Okay? And then we have Google, which is the Google TV, Netflix, of course, and Amazon Prime. And then we have Roku, and then Disney, which has the Disney Plus, which is their newest one they just started last year, and the ESPN Plus. And then they have a 67% stake in Hulu. They've actually increased that stake, so now it is 67% stake in Hulu. Then we have the Apple, which has the Apple TV Plus. And then we have the Dish Network, which has Dish Anywhere, and then has the Sling TV. And then Fubo has the Fubo TV. So those are the exact 10 different stocks that I think that is there may be more, but as far as my research, this is the 10 major stocks that I've found that I want to compare against. So we're going to go from there. So the next thing, what I'm going to do is I'm going to look at the worldwide subscriber counts. And these are all estimates. Sometimes it's really hard to find statistics because a lot of these companies don't disclose certain statistics on certain quarters. So I did the best I could to get the exact estimate of the numbers that I see. So what I did is I took AT&T here, and has a subscriber count of 12.6 million, and the streaming service is HBO Max. And then we'll kind of go through some of these. I'm not going to go through it too deep detail, but Comcast, we have around 20 million subscribers. Alphabet with 3 million. Netflix with 195.1 million. Of course, that is the top of the leader here in subscriber services here, and subscriber counts, I mean. And we'll just mark this one as red, or we'll mark it as green because it's the highest total. Then we have Amazon at 112 million, and Roku at 46 million. Disney at 86.8 million. We'll get to that. They're really increasing their subscriber count lately, so we will get to that. Apple at 33.6 million. Dish Network at 2.46 million. And Fubo at 455,000. So this is the lowest one. We'll put that one in red. And then what I did is I took all of these counts from all of these stocks, and I put it into a bar graph here. So on the y-axis here, I've got all the stocks mentioned here, and then on the x-axis, I've got the number of subscriber counts, and it's in 20 million increments here. And you can see by far Netflix has the huge lead, and of course I pretty much knew that. But I didn't realize Amazon had that many subscribers on their service. So I couldn't believe that. And then Disney comes in third, and of course Roku comes in, and then Apple. So this gives me a nice visual outlook. I'm a visual kind of guy, so I'd like to see those visual graphs. So I decided to put that together for you guys. And then what we're going to do is we're going to look at the subscriber growth. Okay? And so what I've got here is I put down some of the ones that I were interested in. I didn't go through all 10 of them to go through all the counts. But I wanted to look at some of the ones where I was really interested in was Disney, Netflix, Roku, and Fubo. Those were the 4 that I was looking at. So what I did is I took the column here, which is the annual subscriber growth percentage, and I put some extra comments here. So, for example, Disney, their opening day was November the 12th, 2019. 10 million subscriptions when they started out that opening day. I could not believe how many subscriptions. Well, you won't believe this. October 2020, 73.7 million. And then December 2020, 86.8 million. So if I did the math here, from the opening day, 768% increase since the opening day. So this is crazy growth here, and I was surprised that there was that much growth, and that really got my attention. And then I went back with Netflix, which is the second one here, and I went through each year. Quarter 1 of 2018 was 118 million. Quarter 1 of 2019 was 148 million. Quarter 1 of 2020 is 182 million. So I did the math, and it gave me roughly a 53.7% annual increase, which is astounding. I mean, for a company that size to give that kind of subscriber count still is just amazing. So that's a very good increase. Did the same thing with Roku. Quarter 3 of 2019, I have 32 million. Quarter 3 of 2020, 46 million. So really good subscriber count here and really good growth. It comes out to 42.4% annual increase. Then I took a look at Fubo, and of course, Fubo is a very early company, and it has a very small subscriber count. But if I look at quarter 3 of 2018, it's 203,000. Quarter 4 of 2019, it's 288,000. And then quarter 3 of 2020, which is 455,000. So it is growing, 62.1% annual increase. So that is crazy growth here for Fubo. But of course, the subscription again is really low. So this gives me a really good idea of what to subscribe to, what to invest in, because you'd like to see a very good percentage increase, and Disney is by far the most increase. I really like Disney just because it's got all the Marvel movies, it's got Star Wars, it has all the different content that and that makes them unique. You know, that makes them unique as a company to have all that. A lot of companies can't compete with that, and they have their original series, which we'll get into later. It's just it's an amazing company here. So now what I'm going to do is what I put together here. Okay, so here we go. The report also notes that 60% of Americans subscribe to more than one paid video streaming service. Better still, especially for platforms entering the streaming market, is that 93% of U.S. consumers say they will either increase or keep their existing streaming service. With the streaming arms race heating up and consumer attention still up for grabs, what factors are compelling people to not only retain their streaming subscriptions, but perhaps acquire new ones as well? So I really like this graph. Of course, I mentioned already that I'm a visual person. But what it does is it gives you the importance of the video streaming service. It breaks it down by the first thing that people really care about is the cost. And we'll get to that in a little bit, and I'll go through the cost of each plan. After seeing this data, I kind of got an idea of what I need to look for a streaming plan. So cost is 84%. Ease of use, 81%. That means basically if somebody gets comfortable with the streaming service, they're going to continue with the streaming service. They don't want to mess with trying to find how to use the service. They want to keep the same plan. So that was very interesting. And that might be why a lot of streaming services are trying to cut the rates as much as possible, you know, to get a lot of people in for the first time. And then that way they could raise the rates later, but they got them in, and then their ease of use, you know, they're going to stay with them as long as they don't increase it too much on the price. They're going to stay. So, variety available of content, streaming playback quality, speed, and yeah, I'm not going to go through all of these, but those are the main things I wanted to look at when I was just looking at these stocks. Okay, I was trying to see the importance of people just choosing which video streaming service they want. Another thing was kind of good was for a consumer that doesn't place cost as important virtue is rare, and that's no different in the streaming world. According to survey respondents, price is the most vital attribute for a quality streaming service. This puts the impetus on platforms to satisfy a customer's return on investment while being affordable enough for the rest of the media habits. In fact, when asked about what made them cancel a paid video subscription service, 42% say they didn't use enough to justify the cost. So I thought that was pretty interesting. And then they go on and on about user-friendly interactivity plays a key role for streaming services. So I thought this was a pretty cool little comment, pretty cool little article here that I want to show you guys. So back to the Excel spreadsheet. What we're going to do is we're going to look at the content quality. This means I went deep into my research on each of these streaming stocks and went one by one through each of the things that I thought was important with the streaming service. So, for instance, this column is original series. This is their original shows that gives them that creativity, and it also puts them apart from other plans that can't offer those services. Live TV stations. This is all your old channels that you watch, ABC, NBC, and are you able to get those channels? Movies. This was the old movies that you have access to the content, and if they have the availability for sports. So I took all this into consideration when looking at the content, and I want to put all this together. This took a lot of time, so if you would subscribe to my channel, if you like the content you received today, I appreciate it very much. Okay, so first off, we're going to go through the original series. For AT&T, yes, HBO Max has the service for original shows, and the Hulu service doesn't. So that's how that works. And then if we go to Disney original series, yes, Disney has it, and Disney Plus has it, and no for Hulu. And for Netflix, yes. So these are the ones I put in green because yes, they do have that service. And what I did with the ones Comcast, Alphabet, Amazon, and Apple are all yellow, which means they're limited. They have limited original shows, and I found out they're still new. Like I did notice that Apple has some original series and documentaries, and that actually they didn't have a lot of selection as far as I could tell, and it's still relatively new. So anything with limited access or small amount of shows, I put yellow. And then Roku, Dish Network, and Fubo, as far as I can tell, they don't have any original series, which is not good. I really like the original series is what people keep coming back for. So they'll put you into a series, they'll get you attached to that series, and every week they'll come out with a new series. So I thought this was very important, this original series. Live TV stations, this is basically your ABC, your NBC, CNBC, Bloomberg. This is able to get to those channels. And I put in green the AT&T and Disney is green. And they basically, and then we looked at Netflix. It does not. And Comcast, Alphabet, Amazon does. Apple doesn't. Roku, Dish Network, and Fubo does have access to those channels. Okay, and then we got movies, and everybody had movies as far as I could tell. Now, of course, some plans had a base plan, and then you would have to pay extra for extra movies. So that makes it very difficult to choose when you're actually in a plan. You can actually pay for it, of course, to get more of those movies that you want. Sports. I put this AT&T and Disney as yellow because it had AT&T. It does have AT&T has it, but it doesn't have for HBO Max and for ESPN and for Disney. It has it for the ESPN Plus, but it doesn't have for the Disney Plus. And then for Netflix, it doesn't. And then Comcast and Google, it does, and Amazon and Apple, it doesn't. And Roku and Dish Network, Fubo, all has it. So let me go over some of these comments here that I put in place here. Of course, AT&T, it owns Warner Brothers, so that gives them an advantage over the other streaming services. And they're including, in 2021, they've already got their movie slate all set up, and they've got 17 films. And what they're going to do is what they decided to do was when the movies come out of theaters, they're going to actually include them in the streaming services for free. So I thought that was a bold move for them. They usually don't do that kind of things, but they're gonna add all those movies into the streaming service to keep them around. Okay, and for the Disney, like Amazon, Disney Plus is starting to offer more and more original series to keep subscribers, like The Mandalorian, which was a really good series. And Disney owns ESPN Plus for sports. And there's another streaming service of Hulu, which also has movies, original series, and live TV stations. And Netflix, which is the next one, continues to offer an enormous amount of original series. I had Netflix for a while, and you have all types of original series for everything you ever want, comedy or horror or any other types of genres. And it's most movies than I ever seen on the streaming service. And then we look at Comcast, which owns NBC, which gives them a competitive advantage. And they also have access to the Peacock streaming service. And as far as I can tell, limited amount. I didn't see a bunch of original series at this time. They may put more, but they haven't put a lot of money and capital into the service due to COVID-19 is what they have on the research that I've done. Then Alphabet, Alphabet has various original series. Amazon Prime has a good selection of movies. And then Apple, which I talked about before, has original series and documentaries every month. And Roku, which is kind of a different plan, and offers a connection basically to streaming service without a smart TV. So you don't have to have a smart TV. It's a little box that you can put in there, and it will give you a connection to all different streaming services. So it's a little different in the way it operates. And then we have the Dish, which has the Sling, which doesn't have the original series. And then Fubo, which is the one that's becoming popular, has many sports TV channel options, and I think that's why it's getting a lot of interest right now. People are wanting to see sports again after the COVID, and I think people are really want to get back into that, watching that sports, the spirit of the sports. And I think they're going to get a lot of people coming back in when the sports start coming back in the mass scale. So I think that's very popular. So this is what I want to get, and I learned a lot from this because it gives you an idea which stocks have different channels. So I thought that was very important. Okay, so now we're going to look at the plan cost. So what I did is I took all these 10 stocks and I did the lowest monthly cost plan because a lot of them have different things that they add onto it if you can. So what I found out that is Apple here has the lowest, actually, we'll put that green. It has the lowest monthly service plan, and then Disney is a close second here. Now, from that research, I can tell Disney has a lot more movies and live shows and documentaries and original content that Apple ever did, and it's only $2 more. So that's a very good cost benefit there. And you could also get all three. You can get the Hulu, you get the Disney, you get the ESPN, all that for $12.99. So I thought that was a good deal. And then Amazon $12.99. Netflix is $13.99, and that gives you the 1080p resolution. So again, very affordable for all of these. Give it a green. And we'll also give HBO Max a green because it's $15, and then AT&T TV is $60. And then all of these, heck, we'll give these three yellow. Roku, $30. Dish is Sling is $30, and Xfinity is $39, almost $40. And Fubo TV is really expensive, $60, and I thought that was interesting. But they give you, I guess you get a lot of channels with this. You get sports channels, but still, that's really steep. And with the cost, like from the Nielsen ratings and the cost being such a factor, I don't like that at all. So the Google is also 65. So we're going to mark these both red. So I thought that was very interesting to get an idea of what the cost of the plans is. Not only for what I want to do when I get fiber internet, but also to invest in, and which stock is the one to invest in. So then I thought about, okay, let me look at the stock valuation. So let's look at the stock valuation. Let's go through all of these counts here. First off, what I did is I took the column for trailing 12-month PE ratio, and that's on a non-GAAP basis, which means basically there's no accounting to this. Take the accounting all out of the equation. This is actually the real number that you would see. And then I took the forward 12-month PE ratio of the company. This is basically price to its earnings. This is what the value of a company is. Then I took what the cash on the balance sheet is. I went through every latest financial statement on the balance sheet and took a look at how much cash is actually on hand. How much could they put in capital investment into this streaming service? Because that really makes it a lot difference between a small company and a huge company that can put massive amounts of money into the service. Okay, so that gives a lot of leverage. So what I've discovered that the AT&T, of course, has the lowest percentage, around 9%, and that's the lowest. And I made that green. And then some of the ones that are not profitable, which is Roku and Fubo, of course, doesn't have a PE ratio to it. So I'm not happy with this, and I don't normally invest in a company that doesn't have or not making money. So I put those at red, And then if Comcast has got a pretty good value, we'll make that green. And then a lot of these are yellow. We'll make these yellow. That would be Google, Netflix, and Amazon. And then Disney, which is, they've really got hit hard, and their forward PE is 92, which means their parks in their plan does not have to do anything with their streaming service, but their parks have basically closed down because of the COVID-19. So a lot of this, they've been losing a lot of money in their parks. So that's why you see that high PE. I expect that high PE to actually go way lower in the future when their parks open up and they get more revenues and earnings coming in, and their streaming service is doing spectacular. So I really think that they're going to make a lot of money. But they really what they're trying to do is keep that plan, as we said earlier, keep that plan at a small amount so you can get as many customers as you can and then reap the rewards later on. I think that's the best strategy. Apple has a pretty we'll make all these two actually yellow, and the Dish, we'll make that one green because it's got a pretty good PE ratio. Okay, so then we're going to go to the next column, which is the cash on balance sheet. You can see that looks like Apple has, of course, a really huge company. They've got that much cash, $38 billion of cash. Looks like Amazon has $29 billion of cash. And then we've got Fubo was the lowest, which has, we'll put that red, which has $39 million. So they don't, obviously, they have to borrow a lot of money to put into streaming, which I don't like that. So I pretty much ruled out Fubo as an investment because of that. It's too much risk. And so then let's look at Comcast. Is at $13 billion. And we'll put that green. We'll put also Google green at $20 billion. And then AT&T is almost $10 billion. And Disney, which is almost $18 billion. And then we'll put Netflix as a lot green as well. It's at $8 billion. And then we go ahead and put Roku at $1 billion. We'll put that yellow. And then Dish at 1.8. So what I'm going to do is I'm going to wrap up all this analysis. I did so much analysis. I spent all week putting all this together, but I wanted to give all this information really concise to you guys. Personally, what I want to do is buy Disney. I just want to buy Disney. I mean, I think it's got the lowest PE. It's growing the fastest. The cost of the plan for the consumer is really low. And they're making so much progress here with their subscriber growth here. And if you look at Disney again, you're looking at 768% increase since opening day. So I really like Disney. I also like Netflix as well. If I take a look at, if I go back to the stock valuation on Netflix, it's just too high. It's just, I can't invest in something that's 81 or 82 PE at this time. And they've already grown to the point of, I wouldn't say saturation, but they're slowing their growth down. They were doing a lot more growth. I wish I would have been in this earlier, of course, as everybody, but I'm not going to put any additional money in this at this point. Now with Amazon, I really like Amazon. However, I own this a lot in my index funds, and I'm not going to put this as an individual investment. So what I'm looking at now is Disney. Disney is the clear winner, and this is what I'm going to be investing in the future. So that's all I have today. I appreciate everybody coming and watching my channel, and I'm going to start putting more videos out as I was saying last time. And just seeing if you guys like the portfolio updates that I do. Basically, I've been putting out portfolio week updates of what stocks that I'm buying in that stock each and every week, and I have a new idea of what I'm looking for. So I appreciate everybody watching my channel. Please subscribe if you haven't done it already, and we'll see you next time.